Hello guys and girls, and welcome to episode 3 in the quick tip series. Really excited to get into this episode. This has been highly requested, and these are my go-to setups. So I'm going to be starting off with the daily and then going to the 1 hour chart just to show you the variations of these setups. Now, some of these entries will be the evolution of the Falcon strategy, and it's important that you adopt this mindset. Now, naturally, over time, those setups will increase, because as the market evolves, we adapt and we never become complacent that we always can add to our entry. So I've got 10 variations in there, and I could have put in 2 or 3, right? But I want to leave no room for grey areas. So some of them you're going to see they're kind of similar, but it has a few variations in there. Now, to be a great trader, you need to have that level of discretion. So what I highly recommend that you do is take notes and you look at these examples and really learn from why I like these setups as my go-to setups. These are setups that I've relied on for years and years, and I know that these will sustain the results longer term. Now, using this as a type of checklist for high quality setups to reference to when you're taking these positions would be highly recommended. Now, although a lot of these positions in this list, each one has a specific variable and variation, which is why it's important to be specific so you can capitalize on more of those longer term moves. If you're only waiting for, let's say, 1 or 2 or 3 types of setups, naturally you won't capitalize on some bigger moves. So you need to understand what those little key 1% tweaks are. Now, some setups, as I said, they will look the same, but you'll see exactly why they're slightly different. And by having these setups in place, you can have them available to reference. So you can just create a little folder so you've always got them in hand. But guys and girls, let's dig in and get ready to take some notes. Right, let's start off with the first entry here. Now, what you're going to have at the end as well is a PDF document of those go-to setups, so you'll be able to download that and you'll have that at your disposal. So let's look at this on the daily chart. So first one, this is a risk entry at the top of the structure, 3-touch channel with a retrace candle. So this is one of my main go-to setups. If you look at the structure here on the daily chart, notice how you can see that clearly. We have the double top formation. We have the 1, 2, 3. So 3 touches there. 1 hour chart. Let's take a look. So on the 1 hour chart, we also have this looking much clearer. So 1, 2, 3. You can see it's a clean pattern. We also have the ascending channel rising here. So we have the pattern within the pattern. And what's most important to me is this structure right at the top. So as I said, there's a few variations to these type of structures, but what I like about this one is that, of course, it has the retrace candle here. We actually have an evening star formation if we want to be really specific with the candle shape formation, and we also have a doji at the top there. There's 2 ways you take this setup. Now, the slightly higher one of risk is after that doji candle at the top, because we haven't had a solid rejection yet. But when you consider the whole structure, the 1, the 2, the 3, it's a great area to take that risk for that reason. What does that do? It enables you to get into the chart with about a 25 pip stop, and then you're able to take that to the downside for 12.7, and then of course following the 90% rule, 27%. So you see how that changes things. Now the other way to take that is, of course, after that candle closes for a slightly bigger stop. It would likely be about a 45 to 50. Let's call this one 50 pips. And then to the downside, there's about 12.5%. So you can see how it changes, and of course, first target at 5.7. So a few variations there. And what we can do is actually time that even better on the 15-minute chart. So let's actually take a look on the 15-minute chart as well. So as you can see here on the 15-minute chart, you have this channel here, which enables you to be able to get in slightly more precisely. So you know it's at the top of the structure. You can see here, 1, 2, essentially this goes a little bit higher. How you would know and when you would know to take that is, of course, you're looking around here. So after we start to get that rejection down, what you do is you take it around this area here. It's fine. We've now got the retrace, it's solid rejection, and then we're able to get in with the 20-25 pip stop. So you see how you can utilize that chart as a filter. So a nice little filter there, and that is the first go-to setup. Let's take a look at the next one. So the next one here is actually in the same structure. So 1, 2, 3, we have that ascending structure, and now I'm looking for the hover. Now the majority of the time, this is the key variable, that the hover normally occurs near the top of a structure, near the break of an ascending channel. That's when it's most effective. So let's take a look. So if we go to the 1 hour chart here and we take a look at this hover, notice how we've got the previous entry. So we have the ascending channel, we have this retrace candle, 3-touch pattern of the overall bigger 1, 2, 3. And then now what we do have is the hover. So notice how it hovers here. Now you can take these as reduced risk entries or risk entries. Now when they hover, you normally take them as a reduced risk because it's a tight flag like this. So what you do after 6 to 8 hours, as you can see around there, you put the entry on. This is a trade a lot of us took in the community as well. We was watching this for a while. And then you're able to get in with a 25 to 30 pip stop, let's say 30 pips. What that does is it adds to your current trade 7.4 and then to the 90% rule of that low 19%. So as you can see, by adding those and refining those, the hover is a real simple entry. So that's a go-to setup for me. But I'm looking at the hover on the breaks of bigger structures, and the majority of the times they're at the top of structures. So top of ascending channel, break, hover on the impulse, 1, 2, 3. Notice how it just hovers along the trend line, ready to just break. So that is setup number 2. So as you can see, they're congruent with each other, they complement each other. And when you learn how to capitalize on these setups and you've got that defined criteria, you can see how it's super powerful. Let's take a look at example number 3. So let's take a look at number 3 with Euro Aussie. So as you can see here, looking for a buy setup, and this trade is a risk entry ball flag bigger continuation pattern with a 3rd touch at the bottom of the flag. So as you can see with this one, daily structure supports the potential 1, 2, 3 to the upside, and 1, 2, not quite a double bottom, but as you can see, that would resemble that we may be in an expanding formation, which is what we expected. But what we had here on a daily is some strong impulsive moves up. Now we just need continuation on the lower time frame to confirm that move higher. So nice there on the daily chart, 1 hour chart. As you can see here, we have our impulse correction. So this is just a bigger flag. And then we have our 1, 2, 3rd touch. Now the 3rd touch, this is the variable. The 3rd touch doesn't meet right at the trend line. So what's the override? The override is a double bottom within the pattern. We know that this is the structure. You can see this is clearly an impulse correction as continuation. We can see it on the higher time frame as well. What this also has is actually a mini impulse correction within it. So essentially this is a hover within the pattern, giving us even more confirmation. But what the key thing is that it's 1, 2, the probable is that we'll get a 3rd touch. The possible is it only needs a double bottom, and then it goes to the upside. So nice simple entry there, risk entry, taking that on the double bottom, likely about a 30 pip stop, and then of course target would be the length of the impulse. So we can look to duplicate that on the break at around this area here. So as you can see, you probably would have got taken out around this area after this started to pull back. So we did have an 18% target, but what likely would have been achieved is about 14. So great trade. And as you can see, just a typical impulse correction. It's all supported with the bigger high time frame structure. But what we do have is the 1, 2, 3, and it's that override part that is the key variable to look at. The fact that we have an impulse and a continuation hover within it is just a nice little bonus as well. And I'm looking at exactly the same thing on the flip side. If I've got a bear flag, I'm looking at the 3rd touch to take that for a sell as well on the flip side. So that is Euro Aussie. Let's take a look at example number 4. So here we have dollar CAD. So with dollar CAD, this setup, this go-to setup is a double top within an ascending channel at the top of a structure, so risk entry again. So what I like about it is, of course, we're looking at the high time frame structure, we have an ascending channel, and I'm looking for any kind of double top, triple top type formations within that structure on the lower degree. So 1 hour chart. So on the 1 hour chart, what I like about this one is that this can be sometimes a little bit confusing for people because it's not the cleanest or clearest setup, but you can see that the high time frame takes over the lower time frame in this sense, that this could have an element of this, like this. You could almost see it as a descending type formation where it could go back up. It's possible, but what we need to realize is the high time frame structure could take over at any point, and we've been planning this trade to the downside for months. I'm still in this trade, this is still working out, and we've got scalings in this as well. So we'll be looking to keep scaling into this position unless we get a different message from the market. So with this formation here, this you could have entered in any one of these positions. So first point would be this setup here. So you can see the arcing nature, you have the ascending channel there, and you've got that double top. So I really do like that setup. Then you get another option to take it with that scoop there, another option to take it, and then another option within there on the 15-minute chart. So as you can see, multiple setups, but what I like about it is that higher time frame structure right at the top of the structure, and then we have those rejections, those scooping formations, and we have any kind of double top formation. My entry was here on this one, so I got in on that 1, 2, 3 on the fourth touch, but any one of those was valid. Even this one was valid here, because essentially you've got that 1, 2, 3, and you can be ambitious with it. You can move to break even, you can take that one, this one, that one. And remember, when you're taking these trades, and it's really important to know this with your management, if you're going to leave it open for 1%, the best times to do that is at the top of the structure and at the bottom of the structure. Any of those kind of trades, you don't need to be rushing it to break even straight away until we break some kind of significant structure. It's important to understand that. Remember, you're only risking 1%. It's the worst that can happen is a 1% loss. You're already a low risk trader because you're in that category of only risking 1%. Remember that. There's no risky business involved in this. This is just the cost of business, and you are in the low risk category. So nice and simple, and that is one of my go-to setups. I really do like these ones. I hope you've learned the key variables on why I've taken that position. So example number 5 here we have on Aussie yen, so bigger daily structure. You can see that we have this overall double bottom. So we have this pattern here, 1, 2, potential third touch. It's the probable. The possible is that we only need a double bottom and then a move to the upside. So with this particular entry, this is just a risk entry double bottom within a descending channel at the bottom of the structure. Really, really nice go-to setup. So you can see that on the daily there, if we go to the 1 hour chart, you can see right at the bottom, risk entry structure. So bigger double bottom, 1, 2, and what we do have is a 1, 2, 3, and then we have, of course, the all-important retrace candle right there within the pattern. So you see the impulse down, and then the retrace, and then it takes off to hit target for this previous high here for about just under 16%. And of course, minimum target here is just over 7%. So as you can see, very clean structure here, always building the high time frame structure to support it. As you can see, we have so many trades, you do not need to force these type of structures because they repeat themselves so frequently. Double bottom, 1, 2, 3, descending channel, and then we have the retrace within it. So a lovely, lovely setup. Let's take a look at example number 6. So number 6, this is a risk entry at the top of the structure and an ascending channel within an ascending channel. So a pattern within a pattern. So if we take a look at this here, so looking for a sell setup here. Reason being, we have this previous high here. We have that 1 touch, 2 touch. We know that we only need this type of formation, and we could have come to the downside from here. Of course, we did create a third touch, but we knew it was possible. So looking for sell setups there. If we go to the 1 hour chart and take a look at this position, we can see this is the type of go-to setups. Now, I'm not always going to show, the picture perfect setup, because the reality of it is the market is not always perfect. It's imperfect, and you need to know how to read between the lines. So this particular channel, the great thing is we also have a 3-touch pattern. We have a 1, 2, 3. So like I said, a lot of them are going to seem similar, but just a slight variation. The variation in this one is the ascending within the ascending. So I love that setup. This wick here is just volatility. So as you can see, just keep it to 1, 2, and it doesn't quite make it to that touch, but the override is that here is the high. If we get it to the wick, we know that it doesn't need to get to the high. What's more important is that we have this structure, and we can be ambitious with it to say, well, we have a 1, 2, 3 touch ascending within an ascending, very clean structure, and we know pound dollar has a great potential to come to the downside. So taking that ascending within an ascending was a lovely setup, and it's always in my go-to setups. So if we zoom in a little bit more, this is what I'm looking at. 6 to 8 hours at the top of this correction here. You could have put the entry order on. I think I put the entry order in here at this time, and then it took another 3-4 hours till it finally actually dropped. But after 6 to 8 hours, you could have put it on here. You would have to wait 1, 2, 3, 4, 5, 6. So on the 7th hour, as you can see, it takes a little bit of time sometimes, but a nice clean structure, top of the structure, 30 to 40 pip stop, let's say 35, and then of course targeting minimum beginning of the correction, a lovely just under 7% position. As you can see, that played out. Eventually there, you would have ended up probably getting a little bit less if you didn't deal with this correction. You would have ended up being out for around just under 5. But overall, great setup, and of course, we know these type of formations have the ability to really take off. But 1, 2, 3, ascending channel, you can see it's 3 significant points. That's the point. If we got that structure right at the top, even better. But I wanted to show one that's not so picture perfect but has the same principles. So another go-to setup for me on the majority of pairs that I look at. When I see something like that, it's always on my radar to take that position. Well, let's take a look at the next one. Let's take a look at number 7. So this is a reduce risk tight flag. It's a bull or a bear flag, same principle, and it's usually after the first impulse. So it'll be the second opportunity that you get in. So normally you have a risk entry, an impulse down, and then a continuation, which is a reduced risk flag. Let's take a look. You can see the daily structure here of this formation, big ascending channel, and right at the top we're looking for rejections in that area. If we go to the 1 hour chart, we can see here, 1 hour chart right at the top, I'm looking at this structure. So you can see the overall structure here to the upside is just one big ascending channel. So it's a great little confirmation that we have. And we also have this scoop, this double top here. So there was a risk entry position at the top. And then as we zoom in further, we can see the flag. So this is another reduced risk. I like these flags when they're tight. So this is what you really want to be looking for, these tight consolidated flags like this. Not so ones that are really steep. It's not that they don't work, but after the first impulse and then you've got a continuation, this is when you have the higher probability setups. So a nice simple 25 pip stop, and then of course this one was very easy to manage with lots of scale-ins, and you would have ended up with around 10% on this one, potentially a lot more if you held it, but if we just be conservative with it, as you can see, very simple. So the variation is at the top of the structure, it's had a double top, and it's really about, you want to look for reduced risk flags after they've had their first impulse. So essentially looking for that first impulse and then the first continuation has the highest probability. And if you have that at the top of the structures or at the bottom of the structures, if we're looking for a tight flag to the upside, it's the same principle. And that's where I look for my reduced risk flags the most, as early on in the move as possible, anticipating that impulsive leg essentially. Let's take a look at number 8. So number 8 of my go-to setups is, of course, the evolution of the Falcon strategy, utilizing the 15-minute chart. So what this is utilizing this filter on all of my go-to setups. So we've got USD CAD here. We know the bigger structure, looking for that move to the downside from the top. Remember, the first impulse, the first impulsive leg that we're expecting, it's where we're going to have the most amount of 15-minute entries. So if we go to the 15-minute chart, what would be my go-to setup? Well, remembering the same thing. At the top of the structure will be the most precision. The first impulse, when we get that first correction after the first impulse, are the highest probability setups. So we're looking for things like this. Taking the setup here, you can see that arcing nature, impulse correction. So taking a trade here, and taking that to the downside, we're running 13.4%. The next one would be this one right here, just a typical minimum 6 15-minute candles, as you can see, very similar to the CAD yen position in the sense that a very flat correction. So if you saw this on the 1 hour, this would be a great flag to take early on in the move as possible. When you're seeing corrections like this, these are really great trades. Now if we go one step further, where you're really going to get precise and where my go-to setup is taking this 1 hour flag but being precise with it on the 15 minutes. So if we go back to the 1 hour chart, the 1 hour chart has more than enough time, more than enough of this entry, but in case of these wicks, these spikes, you time it on the 15-minute chart for precision. So that is my go-to thing. So essentially, if we look at this, this is its first impulse, isn't it? Normally, the correction starts a little bit earlier on, but with the momentum, this is essentially the first real big impulse, and here's the correction. So it's at this part where you have the highest probability flags. Now, we go to the 15-minute chart. You want to precisely enter and have the most accurate angle. This is a pennant formation, but as you can see, it's still a flag type formation. And then we're getting in as tight as possible. Of course, safely, just above this high here, 20 pips is fine. And then taking that to the downside, which I'm still in this exact position. That is running nicely at 8%, of course, with the trade from the top as well, which is lovely. And There's a few that you're not going to capitalize on every single one. I mean, I didn't get this one or this one. I stayed in this one. But overall, I got into this scaling. So imagine when sometimes you're going to get more trades than not, and you're going to get all 4 of them, sometimes 5, etc. But it's about understanding that with this example, this go-to setup, this is more of a refinement on all of the go-to setups by just refining them even further. And that's how I would do that. This would be my favorite one. When the 1 hour chart looks incredible, 1 hour flag, you then utilize the 15-minute chart for precision. It means you get a greater risk to reward because your stop is more precise, it's in the better area, and you avoid getting spiked out, and you've got more of a cushion, so you're more confident with your setup as well. So I hope that helps on my go-to setups for number 8. Let's take a look at number 9. Let's take a look at number 9 here. So this is a slight variation and a bit of discretion here. So this isn't your picture perfect type setup, but you need to know what to look at and how these can still be very powerful. So when you're looking at this on the daily chart, if I take you back to around this area here, we understand that this is still a correction. This has an ascending nature to it, and we'd be anticipating this trade for one more move down to that third touch, 1, 2, 3, and then a move to the upside. So can we take advantage of that trade to the downside? We can. So if we go to the 1 hour chart firstly, we go into the 1 hour chart, and this of course is 1, 2, 3. We've got that structure there. We can even tighten this up even more and then adjust it to eventually be looking at this structure. So 1, 2, 3. And it's the fact that we have that first impulse, and this is the key variable. This is a 1 hour entry, but refined with the 15-minute. So on the 1 hour chart, that could be a little bit confusing for people. It does have 1, 2, 3, 4, 5, 6, 7. So essentially and technically, we do have enough mathematically amount of hours to take the trade. But I can see how someone would wait a little bit longer. So 15-minute chart, the go-to setup is when the 15-minute chart looks like this. When you can see an obvious 1, 2, 3, this scooping formation. When you see that, that's a great way to filter using the 15-minute chart. And that's a great setup as a completion of the pattern. The reason why I like the setup to take it is because I'm anticipating a completion of the daily structure. So I'm anticipating that in order for that move to play out, it's going to play out because there's a 1, 2, 3 touch. This is an ascending nature. It's had its first impulse. On the 1 hour, it's not that clean. But on the 15-minute, I can filter it and get in with precision for a nice, quick, just under 9 to 1. So really, really great trade. And again, another one of those ones that's not your picture perfect, but there's definitely risk to reward to be able to take it out of that. So that is the pound dollar trade on example number 9. Let's look at the last one on number 10. So here we have the last one, which is the falcon flag. Now this took me a lot of time to develop the pattern and develop the observation, as it evolved from my management, because what started to happen is I started to take trades. They would start off as a typical reduced risk continuation, impulse down, retrace, and then create a larger version of the exact moves that I thought, and then still would continue. So I would look at a structure like this and say, right, if it gets to the downside, if it breaks impulsively like it did, it will have a 90% chance it will get to the beginning of the correction around this area here. So how can I capitalize on that? Well, I would take all the sell setups that I could see, and sometimes they would evolve into deeper versions of the sell setups, and I started to realize, you know what, this is a typical flag, and I found the observation, and I found that it really works. And in particular, Euro Aussie has a great behavior with this. It has a great relationship with the falcon flag and works really well. So let's take a look at the falcon flag within that section. So let's take a look at the 1 hour. So as you can see here on the 1 hour, typical falcon flag starts off as an impulse correction, looking to sell that continuation. It impulses down, it retraces, and they have a few variations, and they just create a larger version of itself. Some of them create triple tops, quadruple tops, but the key characteristic is a minimum as a double top, so it has this kind of formation within it. What I like about this one is, of course, it's got the ascending channel within it, that ascending nature, and essentially on the lower degree, 1, 2, 3 with a retrace there at the top. So you take the sell setup here, it takes you out for break even, you then re-enter at the top, and then it goes on to break. It's a lovely, lovely trade. Now we can refine that even further if we go to the 15-minute chart. So let's take a look at this on the 15. So if we look here on the 15-minute chart for precision, as you can see, we can time that even better. So all you're doing is dropping down on something that's maybe not that clean or visible, and then you can see typical 1, 2, 3. So 1, 2, 3, retrace, risk entry at the top of the structure. So you're taking a trade here like this. you know it's got a bigger version of itself, a bigger flag. 20 pip stop is fine, and then it's likely you would have been taken out after this move here for just under 10%. If you was holding it the whole way and you was taking the longer term approach for the 90% rule, then of course you would leave it open, you'd be a bit more relaxed with your management, and then there was 20%. So really nice variable, and I love these style of patterns because you see them quite frequently, especially with your Aussie. It creates a lot of falcon flags, and when you know that, you know the bigger structure, you looked at the daily where it's going, it just sometimes creates these bigger structures that confuse people, and this was the observation I made. So those are my setups, guys and girls. Those are my go-to setups. These are the ones that have served me very, very well, and I highly recommend that you have as many of those as possible in your own trading plans and use these as references. So what I would recommend to get the most out of this episode and the most out of refining your entries is go and find 3 examples. Find 3 examples of each setup in the list that we've covered and make a folder with images called go-to setups, and you've got them as a reference point. This way, before you know it, you'll start trading these go-to setups subconsciously. So these kind of setups, I don't have to think about them or look at them. I do them subconsciously because I've done my testing, I've done the time, and it just comes with experience. So I'm going to help you guys and girls out with this. But firstly, these are the go-to setups. These are the ones that I rely on. This is the bread and butter. These are the ones that are going to give you crazy, crazy performance if you just stick to understanding the variations. I would love to just give you 1 setup or 2 setups, but the truth is the market is not that simple. There are variations, and I want to make sure that you're all equipped to really know how to handle them. Once you've got these down, watch how your performance just drastically increases. So make sure you put the time in and find those examples. You can even print them off. You can print them off and put them on your wall in your office, whatever is easiest for you to learn. Because if you aren't well equipped with the knowledge of all these setups, you need to understand that they can evolve into different variations. And if you want to capitalize on the bigger moves, then you should better start studying these now, because you'll thank yourself later when you're just subconsciously putting these trades on. When you take the trade, you'll see, right, your forecasting will just get so much better by understanding what the higher quality of setup is. Now we have an episode coming out in the Falcon Processes, which is called Building Your Trading Plan. That's going to be out very, very soon. And I'm going to show you how to build out a trading plan. And it's important that you have these down, because then you can include them in your own plan, knowing that you've got that bulletproof plan that you can stick to and follow as your go-tos with your management, your scalings, your entries. I really, really hope you've enjoyed this episode. I had a great time planning it, as I know this is going to provide so much value for you guys and girls. So I highly recommend that you watch all of these episodes, but equipping yourself with the 15-minute chart, the longer term approach, and these go-to setups, I'm confident it's going to improve your performance. Have an incredible week, guys and girls.